Hey guys, welcome to another gold breakdown. Obviously, we're going to be starting in a couple of minutes here, approximately 5 minutes. So just relax for now, and we'll have a look at what gold is doing. Welcome. Mic check. Somebody just type something in chat. Music check. Is it too loud? If you don't tell me now, you're gonna have to just suffer if it's too loud or if you can't hear anything. That is your problem, guys. Both good? Cool. I forgot I have a mic. Sometimes I just kind of look at like, oh yeah, I'm just staring at my computer thinking that's how I usually do it, and then I just like look left, oh shit, my mic is there. I have to bring it over. Welcome everyone. Welcome to everybody in Zoom. We're getting more people on Zoom consistently, which is good. We have a new member as well, Ian. Welcome. Cool, guys. Basically, gonna get started, right? So, we always start off with analyzing what happened in the whole day, right? I think we had some analysis, but we weren't really looking to trade this entire range. So yesterday probably would have been a no trade day for me if I was looking purely at the higher time frames. Right? You could have very much looked at lower time frames. You know, I think when did that start? So we analyzed it when it was up here. We understood that if it broke above 85, I think, like towards these sorts of areas, it was going to push up to 87. We mentioned that you might see rejection there. If not, you were probably looking for sells towards around these sorts of areas, right? 89, right? So you probably could have got some sells from 89 to come down as you were kind of in this kind of zone respecting, and then you started just pushing up randomly, right? And then I think I took a couple positions as it was coming down here. So I forgot what the actual range was, but it all lined up relatively nicely. So this 15 closed, filled the range, and then this next 15 came down, broke all of these wicks, right? Came down. I was looking for this wick fill, so I think I took this wick fill after it kind of broke down. I think I took it around here, so from here to here, and then I think I closed off relatively soon, which is fine. I think it was a good trade. But yeah, so just on the higher time frames, I don't think there was anything you could have taken, right? Obviously, Don's position played out, right? I think he got in towards around these sorts of areas, down here for his first position, and his second position, or like down here for his first position, second position somewhere up around these sorts of areas. And I explained on stream why I wasn't looking for any areas around here, and my second position would have been around these sorts of areas, which you tapped, right? But regardless, you know, he came out profitable, plus 10, I think it was. So, you know, it's a win. But that's the power of the kind of analysis and understanding liquidity and price action, right? Because you have a better understanding of if price is going to come back to your area, what are you going to do? What is that kind of risk management there? So let's remove everything and go straight to my favorite time frame, the monthly. So yeah, cool. Yeah, so all right, monthly, we're still in this range. We haven't exited the range, similar to yesterday, similar to every single other time. That actually, I'm liking this level. And I'm just looking at this closure here, right? You have some wicks here, so it's somewhere within this range. But you could say 1825, relatively accurate, I would say. So 1990 and 1825, that's your range. Any given point, right? Price can just come back down to fill the entire range, right? You haven't broken out, right? I think this is the weekly candle, so you might have pushed up ever so slightly, but generally, right, you haven't closed above, you haven't broke the highs. So at any given time, right, if you're starting to close bearish and like coming back into, you know, potentially below these sorts of areas here, these areas are, I would say, more around these sorts of areas here. Once you close below these sorts of areas, you might get a top wick breaking these highs, and then you start coming down. You know, that would be very kind of typical of price, because you're closing back into this range, right? You're grabbing liquidity for you to push below this range, right? This wick here, or potentially as it's trickling down, you might get smaller liquidity grabs to break you out of the range down below 1908. But to break out of 1908 and fill the range down to 1825, I would expect you need higher time frame liquidity, which may be in the form of these, right? But at that point, you don't want to be taking the wick entries, because any given point, this could be, right, as it's doing something like this could be liquidity for us to start retesting the highs, right? So only breakouts, and then probably the flip for me if it was sells coming down, because we are currently so bullish. All right, cool. Fucking hell, CJ's here. Somebody ban him. Jack, ban him. Ban the man. But cool, right? So the weekly. The weekly, basically, we closed above. I would say we're potentially respecting this, right? And now we're just bearish. Right? We're just bearish this week because we haven't closed above. We've closed right at this support here, I would say. The daily, I think, also lines up to 2008, 2009, which is a very strong area that price typically respects. And as such, right, you could just see a rejection to start coming down. But now that we're on the, I'd say the weekly, there's not too much to think about, right? You're just bearish. This week is probably going to close bearish unless you have some really strong NFP news tomorrow, which is going to start driving price up. But if it does drive up, you'll still need to wait for a breakout above, right? Because you're still in this range, right? Your weekly range is probably somewhere around there, right? So you've come down to fill the weekly range, cool. But you haven't actually broken out of the weekly range. You haven't, closed above or below. So you're just mirroring this tiny fraction of price, right? Where you closed above this price point, right? 19. Actually, it's this entire thing, because you closed above, right? Filled the range, came down, didn't break, respected, filled the range, didn't break above on a closure, respected, filled the range, and then you just continue to do this until you broke out of the range. So I am expecting price to break this range eventually, all right? It's not just going to range here for the rest of eternity. So as we go down to the daily, you'll understand that, look, right? You have a slightly smaller range again towards here. All right, so 2008 and 1982 is your next range on the daily, and you've respected, right, your previous candle or previous daily, not this daily. Well, actually, let's just say the dates, right? The 1st of November closed bearish, respecting. Today, you closed bullish, respecting, right? This candle here filled the next range down as well, right? Indicating that you've got a rejection, but you filled the range. So if you are to push up, I would say you have enough liquidity currently to push up towards 2008, right? And that's why am I saying that, right? There's two things, right? Firstly, because you've respected this range, so any given point you can come back up to fill the range, right? Or just to fill the range, whether that is like a bullish fill or a bearish fill, right? This was a bullish fill here, and this was a bearish fill. You might get another bullish fill, and you might be bullish and then break above, and you get that drive up, right? That would be in line with all the kind of biases that we have on the higher time frames, right? But the second reason why is because you've tapped into this area of liquidity towards 1969, 1970, right? Which is exactly where this grabbed liquidity before it was able to drive up, right? You got a bit of a delayed action sort of thing going on here, but eventually you did break above, right? You came back for a little bit of a bottom wick before you drove up back over to here. So even if you are looking for positions after you get a breakout, you have this wick here potentially towards 2007, depending on how it breaks above, or you're potentially looking for liquidity towards 2000s, right? Because this probably on your 4 hour or your 1 hour is a strong area which price rejected off of, right? So if it comes down to tap these areas, it's probably a pretty good area if you have like no top wick or something after getting a breakout above to take wick entries to go up. For buys, I would be looking for wick entries because we are currently bullish, right? Daily is very bullish, weekly is very bullish currently, right? Because look at all these, the past 3 weeks have been extremely bullish, right? Monthly is bullish. Everything currently on the higher time frame is bullish. I would also say you have a bullish candle closure that's very much, like in line with exactly what happened here, right? Obviously, you could say you're respecting kind of 1990. So at any given point, you could just grab liquidity above this sort of area, tap into these sorts of areas, and then start driving down. But that's, I would say, more of a 4 hour, 1 hour move, right? I'm purely looking at the daily currently, and the daily is showing that you have grabbed daily liquidity. So there's a high chance you're going to fill the range exactly like this, right? Doesn't mean I'm just going to take a buy now just to go up, right? This is just the daily chart, right? If you are swinging, maybe you could get that position, but I'm not. So 4 hour. Hope everybody's kind of following so far, but let's just drop down. 4 hours looking pretty good as well, I would say. You have pretty clean ranges at the moment. You've printed really clean ranges, right? Previously, this was relatively messy. Like even now, the ranges here don't really make too much sense sometimes. But I would say generally your kind of areas are, I would say, are around here. So why am I saying this is an area, right? Like, why am I saying this is an area? Because currently price, I would say, is still bullish. You haven't broken these lows, right? You have broken these lows, but you created a higher high as well, right? You haven't really broken on a closure below this range or below this range. So I'm still like, I'm mixed biases on the 4. Daily, I'm bullish. Weekly, I'm bullish. Monthly, I'm bullish. 4 hours currently mixed, right? So I'm just looking at the next area, next price point where price lines up with bullishness, right? When the 4 hour looks bullish to me, that means all my higher time frames from 4 hour, daily, weekly, and monthly are then aligned. Then I can look for those 4 hour trades, right? So where is that position? It looks pretty clear to me that it's above 1992, right? Because you know, you've created all of this here. You were bearish, right? This is price probably making a decision, right? You've come down to this area, tap 1977, came up. So if you wanted to start going up, you would probably push above here, start driving up. You didn't. You've respected, came down. You didn't break the lows on a closure, right? So you're respecting. You're respecting, and you grabbed liquidity, right? You grabbed liquidity and you respected. So I'm expecting this to push up, right? After pushing up, you haven't closed above 1992, indicating to me that, right, this is probably enough liquidity for us to tap the top of this range. It's not enough liquidity for me for us to for price to break out of 1992, right? So you might be asking yourself, right, does that mean we need to come down, break all these lows for us to break above 92 and go up, right? Like, do we need to see something like this? I would say the answer is yes and no, right? It's yes if price does that and then we see this, right? I wouldn't be looking for the wick entry, but I'd be looking for a flip. Why? Because I'm understanding that if this is closing below all of this, right, potentially even like below some of these wicks here, there's a high chance this is bearish. But if it's suddenly so bearish and then it flips all the way back up to these sorts of areas and then starts closing above, I'll look for off the rip above here or potentially flips of these candles if it's respecting this, right? So what that's going to look like is potentially something like this, right? So you get a bearish closure, something like this, cool, right? And then you get like, there's probably a bunch of range that goes on here. First, imagine this candle was like around these sorts of areas after price had, you know, done a bunch of shit, right? So let's say you get a bullish candle closure that's something like this, right? If price suddenly comes down, all right, and has no top wick, currently it's looking like it wants to fill the range, which is 1992, and it hasn't, right? This wick hasn't filled the range yet. So any given point, this could flip and come up. I wouldn't be taking the wick entries because then at this point, price looks like it's pretty bearish, right? So I'm not certain if this is bearish, but once it flips, right? Let's say it does something like this, right? Once it flips, after creating this bottom wick, I am a lot more certain that price is going to be bullish, right? So that's why I'm going to be potentially looking for buy stops here, depending on the depth of this wick, right? If it's potentially in like kind of like these sorts of areas, right? If it just breaks these lows, potentially this low, like this, cool. Then I'll have buys off the rip for the next candle, right? Because we've broken these lows, right? Then your third option is if this closure is something like this, then what I would look for is probably a bottom wick, right? Ideally breaking these lows, right? And then the flip to go up. And I would be looking for a buy stop at this level, right? So those are the three kind of options. And it's just kind of playing confirmations, right? What do you need to confirm that the 4 hours actually bullish and it's going to push up, right? You want to understand that, okay, these things are, your confirmations are your advantage, right? If everything aligns, then there's a higher chance that price is going to push above 1992 and drive, right? You don't want to be stuck in a situation where you're wondering, oh shit, does this need liquidity? Like, you don't want to be off the rip here if your price, if your wick is this, because you're understanding that it needs liquidity to go up anyways. So why are you sitting in drawdown while it's creating this bottom wick? Why don't you wait for the bottom wick to be formed and then take the buy stop to go up, right? Because then at that point, if it flips after breaking all these lows and then breaks these highs, you're pretty good to start driving up, because price doesn't just break lows, break highs, break lows, break highs continuously. You know, we mentioned that yesterday as well. So those are my buys above 1992. And I would say they're pretty good. Your next range up on the 4 hour looks to be, you know, like 1999. You know, you'd have a wick fill towards 1997 anyways, right? This is a very nice wick fill. And probably a range, right? You see this wick here as well. This is probably the top of a range, you know, and this closure right here, right? Obviously, when you break past this, you're looking to tap 2009, right? 2008. But those are my current positions. Sells, right? Let's have a look. So let's go back to the daily. Let's have a look at what this range is, right? So we currently, this is our second range down. I would say, is this, yeah, this is pretty much the range down. Let's try to go through the 4 hour and like confirm what the actual range is. But I'm liking it. It's not bad. Because I'm looking at these wicks, I'm looking at all of these wicks here, right? It could be slightly lower. somewhere towards these sorts of areas. But then I'm understanding then you have another range which probably goes up to there. I'm just wondering if this is the bottom of this range. Do you have something else that's around here? You know, potentially somewhere around these sorts of areas. Does this make sense here? This could have been a fake out. This filled the range, came back up. This filled the range as well. So 1973, which I think I might move down a little bit to around 1972. And this one I'll put at it's between 1966 and 1965, so this kind of range. Looking at price based on the 4, let me try to go to the 1 actually. Yeah, it's going to be around here. Cool. 1972 is looking like a pretty strong area as well. I'm just going to be safe because I understand that all these wicks here are ranges, right? So because of that, I will be moving this down towards these sorts of areas. Understanding that every time you close below here, you drove to some degree. See, it's not very clean in this entire range, so I'm just going to take what's cleanest. And it's going to be deleting this line because it's not clean enough for me, right? Obviously, it's relatively clean, but then you also have this. So, like, if I kind of line up this, like, what is the bottom of this? Sure, you can get that, but then, like, you could have rejected these sorts of areas, right? You had a little bit of traffic around these areas. I guess you could say your next kind of area is this. So below 1968, I would say is relatively okay. But that's basically my next sell. As price is currently looking, right? Because you haven't broken the highs, but you created a lower low yesterday. So at any given point, if you start creating lower lows, you get a breakout below 68, you're probably going to start driving down to your next resistance, right? If you break 68, you're going to come down to 66 at least. And then if you break 66, you're probably looking at a higher time frame move down to around 1956, right? Then your range is about 100 pips. You might have some pit stops towards around 1961, but that's still also 50 pips away, so you're pretty strong, right? So I would say my first sell currently on the higher time frame is below here. But we'll do some analysis in terms of like what can you play around these sorts of ranges, right? Because this is still a pretty big range, right? There obviously are certain conditions that need to be met for me to be able to take certain things here. But for example, right? Currently, what is price doing? Price. Let's look on like the 30 or whatever, right? The 30. You had a breakout below, I would say this area here. You broke out below, and then you started closing back above after filling, I would say, your kind of a smaller range towards around 1979. Started going up, but you don't have enough liquidity to push above here, right? So what is this going to be in terms of price, right? If we ranged pretty hard here, right? We had a bottom wick towards these areas, which broke a couple bottom wicks, but we didn't have enough to drive above, right? Currently, we're still closing respecting. So if we get a breakout above here, then a bottom wick, I'll look to take a flip. Once we potentially, where do I need it to close above, right? And where will that liquidity need to be grabbed? So I'm looking at potentially, this is a little bit low. This is not bad actually. So I want to understand now how many pips is my advantage point. About 13 pips. It's not too bad, right? So if Wix was streaming agent, I would imagine like he may be looking for something like this. Maybe not exactly this, but like currently it makes sense to me, right? If you get a breakout above here, a bottom wick breaking these lows, right? But you have a breakout. So what's that going to look like? Let me just draw this out. So say you from here, right? Get a breakout. Ooh, that's a little bit steep. Let's get like a minor breakout. Something that looks like this, right? Your next candle comes down, breaks all these lows, right? And then flips. I'll probably look to take a flip to go up, right? And then this will be my advantage point towards 80. Oops. Yeah, my advantage point I would say is more towards these sorts of areas, right? Understanding that you tapped here, you tapped like this is probably 13 pips, like 10 pips around as well, right? So probably somewhere around these sorts of areas, I would say, is your break even. But I'll be looking for the flip, right, to go up. And then ideally we can get runners towards 1992. But I'll need this to be formed. All right. You have the same levels, Jack? Yeah, I mean, it's just price action, brother. But yeah, that's what I'm looking for in terms of like shorter term like trades. Obviously, higher time frame moves are the ones that you're probably going to be looking for like higher chance for runners. But understanding that, you know, price as it's coming up to 1992, you'll still need to see certain structure getting printed. And I'm just potentially playing a 30-minute range. I'm understanding that generally in the Asian session you don't have as much volume. So even if you are to move all the way down here, you need more liquidity to push down, right? You're just in this range because you haven't had enough liquidity to break out yet. This was enough liquidity for us to potentially start a reversal, right? Because you haven't broken below here. If you did, right, I'll look for sells to come down. But this was enough for us to potentially fill this range up to here, not enough to break out. So if you start breaking above 86, I'll need liquidity to break above 86 to go up. And then if you get a breakout above 92, I'll need liquidity to go up again, right? That's just what price is looking like currently for me. And we can also look at like what level did price tap before it was able to break above 92, right? Look at this, right? This was enough liquidity to get into these sorts of areas. You then got another liquidity grab towards around 70, 77 sorts of areas, right? And then you started breaking up, right? So that's case one. Let's look at multiple other cases, right? So break above 92, what did you need, right? So in these cases, you came down to 74, right? You closed, you tapped these sorts of areas, right? And then this one you just drove, but you came down and had a bottom wick. So if you get a closure above 92, bottom wick towards 1990, cool, I'll have that, right? Because I'm understanding that you tapped this level before you're able to drive up all the way to 2011, right? So that's another case, right? A third case is, you know, you closed, after you tap in these areas, you're now ranging in this area, which we are, came down, broke all the lows, right? Came down to 1974, and then we started driving up. I think we touched 1979, so somewhere around these areas. So maybe it's not enough liquidity. If we start breaking all the lows, cool. I'll be looking for that position. Understanding that 1974 is not going to be breaking this 1971, right? So somewhere around these sorts of areas might be liquidity for us to grab before breaking above. But obviously I'm understanding if you start getting closures below here, I'm not going to be looking for wick entries to go up. If you're respecting, right, potentially respecting 1986, right, these sorts of areas, suddenly you get a bottom wick, right, I'll look for that wick entry, but you need to be respecting. So yeah, that's how I would play the higher time frame ranges, right? I just broke down also how you would have played potentially a 30-minute trade just now, but they're very conditional, right? You have to see everything line up before you're able to take those trades. And if they don't line up to the dot, I'm not taking that trade, because at any given point, price can drive against me, right? And I don't want to be taking like a 50% win rate trade. But that's basically it, guys. Like, pretty similar to yesterday, because we're in the same range, right? If you get this, if what currently is printed is a fake out, right, potentially on the 4 to come up above 1983, you might see another wick fill towards 92, which is in line with that 30-minute play that we were talking about. We just need a little bit more liquidity, potentially breaking these lows on the 4 hour, right? And as that's coming up, this might be enough liquidity for us to get a breakout above 92, salary to go up, or, you know, liquidity and then breakout, flip to go up to 2008. All right, on the flip side, if you're closing, you know, below 97 on the 4 hour, you start coming down, right? You're breaking below, and then you get a closure above below a 68. All right, I'm looking for at least 66 to get tapped, if not probably like 64. So that's a pretty strong like 20 pip advantage point that you have between 68 and 66. And then after that, you know, I'll probably either close 50% there or close full, because I'm understanding that I'm still relatively bullish. So if it's respecting these areas, yes, for sure, I'll be looking for more buys instead of the sells. But if you start closing below, maybe you can like break even and attempt some runners. But I would say the bullish kind of trades are more runner-like currently. Especially if you're just looking at closures, right? You had a closure here, then you broke this in terms of a closure. So are you moving up? That's why I'm saying the 4 hour is very, it's like, it's both biases at the moment. It's very mixed. And similarly with the hourly, like, you know, you had this bearish motion here, you broke the lows, you haven't broken the highs yet. So are you bullish or bearish? So yeah, so once you break above these areas or you break below these areas, then everything aligns, right? 5, 15, even your 1 minute will probably align, right? Everything will align all the way up to the monthly, and you'll be fine. I would say your sells will probably align up to the daily because you're breaking below this range and then you're coming down, but weekly it doesn't really make too much sense yet because you haven't had a closure, right? After tomorrow you'll probably have some closures. But yeah, cool. I'm gonna let some Zoo boys out, but yeah, I don't know which one you want me to unmute, Connor, so I'm gonna unmute both.
You were saying something about respecting 86
Yeah.
Before coming down to go up. Why would it need to respect 86 for the bullish?
No. I would need it to like break above 86, wick down,
okay.
And then go up. Like if it's respecting like this, I can't take any trades, right?
Yeah, that makes more sense. I thought you were saying like respect it below and then go down to go up.
No.
And I was, okay.
Yeah, like all of these, right? These were respecting, and then you got a top wick and you start driving down, right? Like obviously you filled the range, but I wouldn't have taken anything here, especially after you got this bearish closure, right? And then your next, like, I would say maybe you took sells instead of buys because you had no like bottom wick for this, and you respected 86, right? So if something like this happened, and then you had like a bearish closure with like a relatively large wick, I'll be looking for sells, but again, it's like you're in a range which you've tapped so many times. Like, what is the next move? I don't know. So it's slightly dangerous, but. Who's it? Ian. Ian is our new guy. If you want to unmute Ian, you can ask some questions. If not, you know, happy to answer some questions offline if you just want to type it in the members chat or whatever. But yeah, anybody have any questions? I guess. Yeah, could you talk into the mic again? I feel I don't know why. Is it my volume which is?
I think I need to hold it closer to my mouth.
Okay. Yeah, cool.
Okay, yes. My question is, you know, the more I come to the Zoom meetings, I see what are you looking for.
Yeah.
I really, and I see it. But
yeah.
The thing is, like, what confuses me is like, why do you know if you want to go for a buy, it needs to break certain lows or highs, you know?
Okay, so you're asking about liquidity, right? Basically, right? Like, for example, if I want to buy above here, why do I want like levels down here to get tapped, right?
But do you also only go on the past history, watch there what happened, and then use this?
Yeah, I use basically, there's only two things you can use, right? You use previous price data, and number two, you use market structure. So market structure dictates, right, that if you are going to get bullish motion, it's like this, right? Right, so you're going to create lower lows and higher highs and higher lows, right? So that's market structure. And then I'm understanding that previously, if I look at market structure, right, as we're coming up in these sorts of areas, right? For example, let's say, where's a good area for like, all of this was just a push, so it's difficult. But like, for example, this, right? Where's actually a good, I mean, this is pretty good. Like, so you came up, right? You were closing above at some point, right? These candles were printing a range for you. Like, okay, you were in here, you were closing above, but you respected and you came down, right? And then you came back into this range, but you didn't break out of the range. You were still in this range, right? So for market structure to happen, right? Firstly, you need a breakout, right? A breakout above, right? So these areas, right? So we're understanding that when you break above, you probably go to your next range. And then as that happens, you got to come back down, which you did here, right? And then you can start going up again if you're bullish, right? So that's what we're looking for in terms of price. But we're understanding that based on previous price history, every time you want to break up or continue market structure, you need to grab liquidity, and liquidity is like momentum. So if you imagine the markets, right, it's not going to do this infinitely, like exactly perfectly, right? There's going to be deviations to this. And what we've noticed is basically that when price comes into the, like say it's ranging here now, right? It's showing us that it doesn't have enough liquidity for us to drive. Like this lower low, sorry, this higher low was not enough liquidity for price to start breaking these areas and create that new higher high. So in that case, I'm looking for potentially a breakout and then liquidity to be grabbed to start going up. And we've just noticed this like everywhere on the charts, which is why we started looking for liquidity. I'm just trying to find like a place where it shows you this very clearly, right? Like for example, this, you know, you ranged in this area, in this box. Let me just draw a box for you. Like you ranged in this box, right? And then, so if you were looking at market structure, it'd be this, right? Up, down, and you'd expect up, right? But you ranged here. So what actually happened was you did this. Oops. You did this, up, ranged, right? And you didn't get, you weren't able to break out. So you broke below to go up. Right? So that's exactly what we're looking for. We're looking for times when price shows that it doesn't have enough momentum to continue in the direction of market structure, right? And then we're looking for these liquidity grabs. Does that make a little bit more sense?
Yeah, I understand.
Yeah. And then the last thing is where we look for these liquidity grabs, right? That's the last piece of the puzzle. And then that's just time frames. Like we just look at, for example, right? Last time we were ranging in this area to this area. What did price do, right? We were in this area. Let's say, yeah, you're in here, right? So last time price was in this area that we were bullish, right? So potentially like, I would say like even this, all of this, you're just in a range. But you could say that, you know, price is potentially looking at these, like this potentially, you're breaking above, you want to grab liquidity. This could have been a liquidity grab to go up. So maybe something towards the next range down, which is towards 1949. So we would be looking for potential buys in 1949 and have a stop loss below, I don't know, like if you got on here, playing like a stop loss below like these lows here, right? So for about 120 pips. And then we'd be looking for this as a liquidity grab, understanding that it happened here. You know, you had some price rejections towards these sorts of areas. This was another kind of strong area for us to make a decision towards these areas and then drive up. And that's just what we're doing currently for price as well. But I would say currently we're not really looking for as much liquidity grabs. Like we're still looking to see where liquidity will be grabbed, but we're not going with liquidity grabs because price has been in this range for such a long time. And it's grabbed liquidity towards 70, which we analyzed on the daily being like, okay, 70 is a very strong area, right? The daily, if it taps 70, high chance based on previous price action, right? Tapping these sorts of areas, you have enough liquidity to start driving up, right? So now that it's tapped here, I don't know where the next liquidity grab is going to be, right? Ideally, right? I think there's multiple ways liquidity can get grabbed, right? Either you get a range and you come down and you grab liquidity to go up, right? That's number one. Number two is you do something like this, right? You came down and you grab liquidity so that you can get a break above here to tap here, and then you start ranging here again, and then you grab liquidity to do this, right? You see this as well, all right? And then your third way of grabbing liquidity is just like you get a break above and then you grab less liquidity to start going up, all right? So these are, okay, so these three scenarios, let's break this down, right? This scenario, I would say you don't have enough liquidity to break out of the range. So you need to break out of the range and you want to fill the range, right? So you need more liquidity because you need to break out of the range, number one, and you need it to fill the range. So it's a deeper liquidity grab, right? In this case, on the right, you have enough liquidity to break out because you didn't need it. You didn't need liquidity to break out. Once you broke out, you only needed liquidity to push. So it's a slightly smaller liquidity grab. That's what we're expecting, right? And then with this, right, price is kind of just, you know, not really sure what it's doing. Then you got, you know, a closure below, you started ranging here. So first I need a liquidity grab to push us back into this range, right? Push us back into this range. We still don't have enough liquidity to break above. So you get a liquidity grab to break above, and then you just look to take this up. Does that kind of make sense?
Yeah, makes sense.
Yeah, nice. Any other questions from any other boys? We have no female represents. Jesus.
I have like two questions.
Yeah, go for it.
One's like stacking buys when, or stacking positions when, sort of what you're looking for to indicate that you'd want to do that, and like how big of a gap between each position are you leaving?
So there's a couple ways to answer your question. So stacking positions, right? You have to think about if you're stacking, like for example, your one position is risking 1%, right? But you're willing to risk 5%, so you stack 5, right? And how you stack 5 is like you can kind of go into like off the rip like 5 at the same position, or you can stack like once it flips after grabbing liquidity, or it's like break of a certain high and then you kind of just add to your position. There's multiple ways to stack. I don't really know in terms of what the best way to stack is. I think it also really depends on the type of position. Like for example, if you've grabbed liquidity multiple times, you get a breakout, then you've grabbed liquidity again, and then you're looking for the flip, you could potentially stack that relatively harder than like, for example, if you haven't grabbed liquidity and you're expecting to be in drawdown first, right? Like there's certain times when you'll see the markets print something which is very, very in line with market structure, very, very bullish, for example. Like for example, if you get a closure above 92 right now, right, I wouldn't stack, right? But if you get a closure above 92 after tapping all of these areas, right, you break all these lows and then you tap, I think there's a much higher chance that you're going to fill the range towards 2008. So I'm more likely to stack, right? But again, it still comes down to your own risk management. Like how much are you willing to risk, right? Because for example, if you stack like 6 positions or like 11 as Jack does, then like he's probably risking like 150% of his account, right? And at that point, it doesn't really make sense, right? I don't think there is like a best solution to like how to stack. I think it's just once you master your own trading style, like Don has, then he'll have a better idea. Like subconsciously, I would say as well. Like I've asked him multiple times, when do you stack and when do you like not stack? And like he doesn't really have like a straightforward answer. And I guess a lot of it is just his own gut feeling. You know?
Or his like his experience on the charts, and then him knowing like what a more likely play
Yeah,
out, and then
and how exactly, and how I would interpret that is, for example, I have so many more confidence. Like, what is the best case scenario for me to get buys above 99.2, right? Ideally, like I'm talking like the best case, impossible case that it can happen, right? Is this, right? So for example, you get this, a breakout, a massive liquidity grab, like I don't know, towards like 1900s or like 0 for price, and then you get a flip. That's best case, right? And then you just kind of push that back towards what is more likely to happen, and then like, you know, what is the kind of confirmation you're looking for to make sure that, okay, this trade is likely to play out, right? I would say once you get a liquidity grab breaking all of these, I'm pretty happy for it to continue up, right? And then there's like another level of confidence. Like if you break all of these lows and then flip up, right? You're definitely going up, right? You'd imagine you're definitely going up at least to 2008, right? So that's kind of, I guess, how I would approach stacking. But yeah, I guess it's a lot of confidence in the charts and your trading style.
Okay, yeah. And then the other one was that if you look on here's like the weekly time frame,
yeah,
right? And there's three times we've hit like 2070.
Yeah.
Right? Yeah. So the first two, the grab liquidity, are much lower.
Yeah. Towards like these areas, right?
Well, I'm literally looking on the bullish weekly candle that goes all the way up. Even on them,
like here,
they're down at like 1960 or
1960,
or
yeah.
further down. Which is, I mean, it's slightly different. We're more narrowing the third time, but I mean, is there a possibility we might end up down there on the weekly?
100%. There's 100% chance that, like, you know, that is a possibility. Like, I'm not saying that it will definitely come down, right? But I'm saying that you, like, for example, right, when we were looking for the 1970 positions, right, I'm just saying that this is enough liquidity for us to break out of this range. I'm not saying it's going to drive all the way up to retest the all-time highs. I'm just saying that once we tapped here, we had enough liquidity to break out, right?
Yeah.
So if you want liquidity all the way to come up, right, you can look at where price tapped. Like this, all of this is probably like 1 or 2 weeks, right? So you tapped into 1935, you tapped into like 1940 something. You also tapped into 19 kind of 60, these sorts of areas, I'd say, on your weekly to come up, right? You're looking at this wick here, you're looking at this wick here for sure, right? I would also, in that case, I'd look for where price came from, right? So for these positions, it looks like you grabbed this tiny bit of liquidity and then you had a massive catalyst for price to just start driving up, right, in 2020. So I wouldn't say, like, I don't know where liquidity was grabbed in this case to start going up. So it's just slightly more messy to me. Like, there wasn't structure from, at least on the weekly, right, from 1766 all the way up to like 2033. No structure there, right? If you were looking for bottom wicks, you didn't get any. Like, that's how bad it was, right? So it's difficult to mirror this.
Yeah.
But then, for example, like these cases, right? We were looking for, like, you know, especially how the monthly was reacting to this price at 1825. Like, we were very much mirroring this, right? This kind of push here. So as of now, right, I would say in terms of confidence, sure, like these areas you also got very strong pushes up and whatever, right? So you could definitely still mirror all of this, but now that we've got a closure above all of this as well, right, on the weekly, you could be looking to mirror this. Like, I would say initially when you didn't have these 2 weeks of data, I'd be looking at this and this as my two strongest, like equal strength mirrors, right? Then you got a closure above. I'm looking at this as slightly stronger confirmation now, right? It's just what matches up the best, I would say.
Yeah, makes sense.
Yeah. But like, as I was breaking down liquidity, right? Like, liquidity can be in many forms, right? For example, you may need liquidity below these sorts of areas for us to drive back up, right? But at the same time, you could get, when you're like ranging in these sorts of areas, right, you could just get a breakout here, you get small amounts of liquidity like this to break up above here, and then once you get towards these areas, you get another liquidity grab to go up, and then you do like kind of small liquidity grabs to do this move. Like, that's also something price occasionally will do, right? And then you'll just see this as more like potentially 4 hour or 1 hour liquidity grabs. Whereas if you're looking on the daily, you might see all of this as just one bottom wick and then a drive up, right? And then another small bottom wick and then another drive up. But like, liquidity comes in so many different forms. Like, this can happen, what we broke down just now, where you had like a breakout and then like smaller liquidity grab to go up, or you have a range and then you don't get liquidity, like you don't get a breakout and then you get a steeper liquidity grab. Like, all of this can happen. So that's why, like, for example, we're so bullish at the moment still, I would say, on like the weekly, daily and monthly. I'm looking for like potential wick entries, but if we start breaking below here, because now we've created this bottom wick for the weekly at a very strong point that I would say is enough liquidity for the daily to break above 2008. I don't know if I would be looking for wick entries anymore, because as it comes down, if it breaks, like even if it doesn't break this, high chance it might start retesting the lows, and then you might get potentially the 1960s areas that you were talking about, right? But we'll see that as it happens.
If we're arranging between 86 and 92, might you come to the conclusion that you don't need as much liquidity down to like 71 again to break 92, since we're ranging up there and grabbed liquidity down there once?
Yeah,
like
I would say so. Yeah, if you start ranging here, right, I would say generally, right, if you don't break all of these lows and then you kind of get like, I would still say 86 to 92 is difficult to trade on the higher time frame. Like, for example, the 4 hour doesn't look clean. Doesn't look clean to me at all, right? Like, maybe on the 1 hour it looks not even, no, man. Like, let's see, like the 30 maybe, because like I'm understanding that 30 moves are like, much smaller. Like, if you zoom in now, right, you get smaller ranges within the 30. So if you do get like a breakout above here, you could be looking to target your smaller ranges towards like 88, right? But if you want everything to line up, I think 92 is your best shot. Like, anything above this, like for example here, right, you got a breakout above, but you tapped all the way down to here. We haven't tapped here again, but we also, like, we're not bullish or bearish currently on the 4 hour. We're just in a range. So trading the breakout within the range is slightly more difficult, I would say. Like, again, right, it comes to all the confirmations. For example, if price is respecting, right, like all of this, and you get a bearish candle respecting, bullish candle next respecting, and you haven't filled the range yet, potentially I'll be looking for, you know, a bottom wick and then flip. I wouldn't be looking for a wick entry anyways, right? Maybe you can get a flip, and then like maybe once you get a breakout, you'll look to fill this range. But that's like best case scenario, and it's unlikely to happen, right? So
What would be your like ideal situation for buy like wick entries at the moment? Because I didn't really hear you explain any, which you're probably not looking for that right now. But if there was a perfect ideal situation,
yeah.
how would you catch a wick entry?
Okay, so perfect wick entry currently, what I would need a breakout above 92 with basically nothing here, right? Like no other structure being formed currently, a breakout, and I'd be looking for potential, like, well, we'll have a look, right? So for example, all of these, I'll be looking for wick entries towards 77, right? So understanding that we're kind of mirroring all of this here as well, right? You filled this range here, so you can imagine this, like, it wasn't a closure, but you know, you filled the range. So any given point, once you get a closure above here, I'll get this to be tapped and then potentially going up, right? But if you get 77 tapped initially, so for example, you're here now, you're ranging or whatever, and then you come down to tap here, and then you start closing above, I'll look for a small wick to go up, right? I'll look for a flip to go up. And then thirdly, right, if you get this, you break 77, you probably come down to these sorts of areas, right? But you don't break this. It's very crucial that you don't break this. But like these sorts of areas, oh shit, that's a very bad thing. But yeah, okay, so once you break that, and then you get a closure above here, I'll take this off the rip.
So the first market structure arrow was like a wick entry. The second was a flip, and then the third was off the rip.
Yeah.
Cool. Thank you.
Does that make sense though?
Yeah,
that makes sense.
Why would you say the between the off the rip and the flip? What's the difference in liquidity? Like,
The difference in liquidity is one of these is tapping like a pretty solid area for me, right? Like down here, but I don't know if that is a break below this area for us to continue driving down, or if this, like, because we haven't really tapped into much greater liquidity, like compared to this wick here. What is this, like 10 pips? It's 10 pips more of liquidity. Is that enough for us to drive immediately? I'm doubtful, right? But if we then come down, create another wick around these areas, and then I take the flip, then it has another kind of short-term liquidity and confirmation for us to start driving up, right? Whereas for this position, you've broken all these lows to then flip and close above.
You mean like the one with the most liquidity will probably...
Yeah, because, okay, so if we extrapolate, right? For example, your best case scenario for off the rips here is if price is ranging, right? Grabs liquidity towards like 1800s and then flips, right? That's your best case scenario. And then I'll be taking this off. Would you take this off the rip, right? If price came down and tapped, say, 1825, would you take, if you then got a closure above here, would you take this off the rip? Right? You would, right? Because you're understanding that there's no reason for us to tap all the way down here for us to then flip if you're not going to drop, right? So then you just ask yourself, right? If I move this up, 1887, are you going to take it? Yeah, I will, right? If you come up to here, will I take it? Yes. And then like when you get to this zone, you're like, I'm not too sure, right? But as long as you break, I would say all of these lows, like I wouldn't want it to break this low, but if it does, right? Okay, so let's evaluate, right? So if you break this low, or if you tap exactly this low, I'll still look for this off the rip because I'm understanding that you haven't broken this low, right? I'm still bullish at that point. So it's pretty good confirmation. I'm actually more confident if it breaks all of these lows and then comes up to flip. Why? Because if it's broken all of this and my sells didn't work out, right? There's a high chance you have enough liquidity after breaking all of these highs to come up. Yeah?
Makes sense to me.
Jacob, did you get that?
Yeah.
Yeah, it's just like for example, you just draw up your charts, your line, and just move this, and just feel, just understand how you're feeling in terms of how confident are you that price, if it flips, is gonna drive, right? I'm pretty confident all of this area, right? Anything below here, I'm like 100% confident, basically. Like there's always that 1%, but I'm pretty much there. Once you get towards here, I'm like, okay, I'm starting to be less confident now, right? And then like this zone is the hardest to play. Like, are you breaking below or are you just faking out to go up? I don't know. But then once you get to these areas, you're wondering, you're asking yourself bigger questions like, is this enough liquidity for us to go? And then you get to these areas where you're just doing this. Like, is this, am I going to take this even? Right? Like if I took this off the rip, what's to say that this isn't a fake out to come down, because 4 hour could be bearish. But if 4 hour was bearish here and then flipped, broke the highs, there's a much higher chance that it's going to drive.
Alright, but aren't you technically entering at the, even though it's two different scenarios, aren't you entering at the same level?
Yeah, I'm entering at the same level, but like
But
my
just-
buys are here regardless, wherever this breakout is, right?
Uh-huh.
But where it's tapped previously before being able to come all the way up to there is very important, right? For example, if this price didn't even tap and it just went straight up and closed above, right? Are you confident that this is going to happen? This wick fill is gonna this fill up to 2008 is going to happen, right?
Yeah.
Comparing this to this, and then comparing this to like multiple other situations. Like the buys above here are still the same because you've closed above the range, right? I'm understanding that when you close above, there's a high chance you could go and fill the range, right? So I'm looking for a range fill, but I'm also understanding that for us to fill the range, you need to grab liquidity from certain areas, right? Where are you going to grab liquidity?
Okay.
You start moving
I
this.
would say I understand the liquidity part, so
Yeah.
but more about the entry. So now, what would it be like a closure and then flip, and then here it would be just closure and then off the rip, because you're like, that's because I get you only came down here, so then you're gonna take the flip, and then you came down all the way, so then you're gonna take the off the rip, so that makes sense. But
Yeah, okay, so let's break this down, right? So why is it off the rip, right? Because I'm understanding that you've grabbed this liquidity here. You are very, very, very bullish once you flip, right? At that point, there is a high chance that price will not wait for you and just rip up. There's a very high chance that price won't even give you a chance for an entry. Like, because when it closes above, it's not gonna like there's a very high chance that price is not gonna close in a position where you can get an entry. It might close like this. Right? And at that point, you've filled the range. I can't take an entry here. Does that make sense? So, if you do get an entry above here, right, I'm taking this off the rip because I'm understanding that there's a high chance this is going to happen on the left. And it just hasn't done it yet because it's come up to here and just so happens at that 5 minute mark, it's just closed above, right? And cool, I'll be looking for that position.
gotcha. And it's like saying, since you only came down here and you're gonna take the flip, it's like, if I'm gonna take the flip, it's because I know we've only tapped here, so it's like I know it's strong, but it's like, is it that I wanna? Is it strong enough that I want to take the bet that it's gonna actually break it and then take the flip, or something like you said, you've already tapped all these levels, so you're coming back up here, so I'm confident to take, so I don't basically miss the entry.
Exactly. Like with this position in the middle, right? I need one more confirmation that it's going to go up. With this entry, with this setup, like it is so much like I'm understanding that price is so bullish, right? Actually, no, it's not. It's this middle one compared to this one, right? This one was just our example one. But as price is coming down, breaking all of these lows, and then closing above, with this entry, I don't need that level of confirmation. Whereas for this one, I do need that little bit more confirmation.
Gotcha.
Would you mind if I made a couple annotations to see if
No,
I
go for it.
understand
Go
this
for it.
correctly?
Yeah.
So here, because of the closure above, we're taking the wick entry. We enter probably somewhere around here on the wick because of this. Whereas this one, because since we got this, we need the flip say somewhere to enter around here because of the liquidity, but we didn't get the closure above here. So we'd have to wait for the flip. And then here, since there was no confirmation, we have to wait for this closure, but that's why we're off the rip because it won't wait for us.
I would say ideally, yeah, okay. I think generally, like, I think I marked it slightly not as accurate as I would like to, but imagine you're ranging here, okay? That's where your range is. For this one, I'm gonna move this up here as well. So imagine you're ranging in 1968, 86, but it does also apply to what you had it. So let's just put it there for now. But okay, so firstly, I'm looking for liquidity here. Why? Because of these, right? I'm understanding that last time you broke above here, right? You tapped into these sorts of areas after grabbing liquidity again towards these areas. So if this is mirroring this, then I'm looking for one more liquidity grab for us to push above. All right.
Yeah.
So the wick, once it breaks above with current structure, you haven't tapped into this area yet. So I'm expecting price to tap into this area before it's able to push up. And as such, right, as it breaks above, I'm not taking this off the rip or a celery to go up or the break of the highs yet until it taps here. So once it taps here and I have confirmation that it's going up, there's a high chance that it's going to drive, right, drive up at least to this area, right, before it wants to come down. So I can take this as my break-even point. So that's case one.
Oh, so you'd enter at 77.
Yeah, I would enter exactly right here, right? For this position,
Okay.
for example, you just come down to take this liquidity towards here, right? But you haven't got confirmation that you've closed above 92 yet. So I can't take the flip here. Maybe you can take the flip here on a lower time frame to fill the range up to 92 if you're ranging between 86 and 82. But if you're looking for, like, yeah, it would be okay if you took the buys above 86 to here. But I'd also be mainly looking for the buys above 92. And once you get that, I'd look for a small bottom wick. I don't know, like, it wouldn't have to be very big, like legit, like just somewhere like here for us to flip. It just needs to come down first, right? If it comes down first, there's a high chance it's going to flip. And as it flips, I'll take the buy stop to go up.
Oh, okay. So the flip would actually be at that 92 main level rather than at 86. 86 could be a potential, but you're talking about the flip of the wick after the closure.
Yeah, but I would, like, what you saw here as well, right? Like with this candle, this candle, once you flipped above here, you also clean traffic above towards 92.
Yeah.
So if you're ranging hard in this area and then you get a liquidity grab and then you break above, you get a breakout above 76, I'll look for the same thing. I'll look for a small wick to come down after you break above, small wick, flip to fill a 92, and then that's your break even. Does that make sense?
Okay, cool. Yeah.
Like that. Go ahead, Connor.
Oh, I was just gonna say for the third one, the reason you need it to be up here for sure is because since we're breaking all these lows, you don't want to like get in a position where it just continues down. So that's why here on the closure, the off the rip makes sense because you don't want to risk down here like getting stuck in something, but you also know that once it gets to here, it might just continue to go.
Yeah,
like,
just
the range.
think about everything in terms of confirmations again, right? You can still trade this range here, this range. You can, right? Because you're closing above all this. If you're ranging here and then you get a closure above here, I'm highly looking for something that's similar to this, where you have like a bottom wick and then flip. But once it breaks through another range, I'm understanding it's not going to stop, right? This was enough liquidity for us to start driving. So I'm off the rip here. But if it closes above 86 here, I'll still look for a bottom wick after even tapping lower liquidity.
Yeah, that makes sense.
Because at any given point, right, what could happen is this comes down, fake out, liquidity to go down. Right?
Yeah.
Whereas if it breaks through the next range, high chance that you're not going to break all of these highs just to fake out after breaking the lows.
Yeah,
Yeah?
that makes sense.
What was that, Jacob?
I was gonna say, so when you did say that for the scenario that you do take them above 6, I kind of got lost there. So you said
Yeah.
you would do the same thing above 76, but what would you need to say?
Yeah, so above 86, right? You need to range between 86 and 82, showing that you don't have enough liquidity to break above 86. Right? So if you haven't broken above 86 as you are currently now, right? And then you grab liquidity breaking this wick here, I'll look for a buy above 86. But
Isn't that the same? So go ahead.
yeah, so I'd look for a buy above, but I'd need a bottom wick after it breaks above 86 for us to retest 92.
So what was the difference between that and above 92?
It's just confirmations, right? Which one am I more certain will definitely drive? The one above 92, right?
So
I would likely take both, right? But for
and the
this
same with the extension
position,
function, like with the person in 92.
yeah, with this position, I would need probably a slightly steeper wick to come up, and then I'd like to take the flip down to, up to 92. But for this position, right, I'll probably need a smaller wick for us to go up. Because I'm understanding that with this position, there's still a chance that price is going to fill, but there's also a chance the price will start coming down, right?
Am I right in thinking that you're always looking for the closures above those, so it's not just like break up the range
Yeah,
highs?
it depends. So, for example, for these first two, like closures for sure. But once you get like these positions, right, sometimes it's so difficult to get a closure because it's not going to wait for you. So break above current, like once it breaks above this wick, honestly, at 93, I'm expecting it to fill up to 97 very easily, right? So I might just like once the wick breaks above here, I'll look to just take a buy off the rip to start going up.
Yeah, okay, cool. Without a closure, yeah.
Yeah. Just because like if you are like closing very bullishly constantly, right? And then you just start breaking above all of these wicks here, like there's a high chance it's just gonna fill, right? Like what does this look like in terms of the 15 into like you got a closure, you had like just a straight up, right? No top wick, so like I would have probably just have looked for something to start going up. Like even with this one you didn't close above, right? But yeah, like if it's driving very heavily like these, and then you got a closure above this, right? Like what's to say? Like you did get a closure above, which is nice, right? But if you didn't, it could also still drive up, right? If you had a range between this and here, right? What was this range? This range was that was like a 60 pip, 70 pip candle. So like it's not waiting for you.
I'll say it depends on what time frame you're on as well.
Yeah.
You might be able to capture 5 minutes.
Look at this, right? Look at this. Once you break above this candle, price then had one clean push up. Very clean push up, right? Once you break above this high here, price had a clean push up to the next range, right? So once you break highs on the wicks, typically if you have enough liquidity, you'll just drive, which is why when I mentioned that just now, right, with all of this, if you get liquidity grab and then you break above here and it's just showing that it's not stopping, then there's a high chance you're just going to start driving up.
Yeah, okay, got you.
Elvis,
Yeah.
can you explain your trade?
My trade?
From today, like you did like a weak fill, I think.
Yeah, I need to find the trade, but I can like show you what I could have taken today. Like,
I mean, like sometimes, well, I just want to know why did you take it?
yeah, so you know how we mentioned like it's not going to break the highs and then break the lows for no reason, right? So, for example, you're in a range here, you then broke the highs, right? Broke the highs, you were looking like, okay, cool, I'm pretty bullish to go up, and then you didn't break above, and you started breaking below all of these lows. Right, this wick I didn't get in because obviously you haven't broken below all of these yet. But once you got this next 15 candle which broke below, in terms of a wick, I was understanding that you're probably looking to fill the next 15 range coming down, which is anywhere from here to I would say around these sorts of areas, these areas here, right? So I think my trade was literally as this broke this the second time, I was looking for this position to come down, and like I think it was on this candle.
Broke what?
Broke this wick to the left. Like for example, you didn't have a closure below, right? But I'm understanding that your wicks, all of these, right? You were breaking all of these lows, right? You came down, you were very bearish after grabbing liquidity. So I'm understanding that this is going to push down, right? And it's going to tap at least into 1980. So I was just looking for entries to take me down to 1980, right? And as it broke these lows, and then you also grabbed shorter term liquidity because that's what this is, right? On the 5, you grabbed liquidity back up to these sorts of areas. Once you started like breaking below these on the wicks, I think I just got in around like these sorts of areas to start coming down.
Is this like what type of entry is that?
It's not a type of entry that you can kind of say is in the playbook. It's very much just price action and then like understanding where price is likely to go.
Oh, and understanding why it's
Yeah.
driving down, and then you see where it's gonna head.
Yeah, like for example, if I'm just looking at the 15, right? Once you have these wicks here, I'm like, okay, cool. You've broke below here, you know, you tapped here, right? If you were to respect, you'd probably start going up, right? You'd grab liquidity to go up. So this is either a liquidity grab or a push to come down. Right, and I think I also took another position after this, closed like this, grabbed more liquidity, and then started pushing below. I think I took another position here, a sell to come down, but I closed this at break even because it hit break even for me. But yeah, yeah.
And that,
So
I would say for that position, Elvis, why couldn't you say that you closed below here, and then why couldn't you just take it like the flip of this candle down?
yeah,
So I
okay,
feel like,
that's a
say
good
you were
question.
looking at
That's a good question, right? So we're understanding that price is bullish, right? So if price is bullish, you get a closure below here. What are the things you're worried about, Jacob?
fake out.
Yeah, right? I'm worried that this does not have enough liquidity to go up. You broke the highs, right? You broke the most recent highs, wicks and closures. So I'm expecting this candle to flip almost, but it didn't, right? So as this closed below, I'm worried that this is a fake out to start coming back up and retesting the highs, especially after you grabbed this liquidity, right? So I'm looking for shorter term liquidity. You know how we mentioned that liquidity can be in the form of like this coming down to get that breakout above, but you don't have enough liquidity to fill the range or break out the next range. So you range here, grab more liquidity as a fake out to come up. That's what I was worried about.
Liquidity, yeah. Grabbing, you thought it. You would think that could just be liquidity for the liquidity.
Exactly. Yeah. And then once this didn't do that, right, came down. Cool. I was looking for these positions to come down, at least in the short term. I don't know in the long term, right? But I was looking in the short term to come down to fill the 15-minute range, which is towards these sorts of areas.
Gotcha.
I was actually worried that was the case, that was just liquidity to keep going up.
Yeah.
Because I was in Don's trade all night. So this morning, once it broke 86, I actually just like adjusted my stop loss to like 86 and put my take profit to 82.
Oh, okay.
Just because like I was just like, I didn't want this to just be the only chance before it just
Yeah.
rocks over 92. So I was
Yeah.
like, I'll just take the L if it stops at 86, but if it hits 82, like 82, then that's cool. And then it just hit my stop loss first. But I would have rather in that case hit the stop loss than if even liquidity didn't go to like
100%.
My stop's a 93.
Yeah, and that's obviously coming from experience, right? That's obviously coming from your experience as, you know, trading these ranges. You're understanding that a fake out could happen, so you're putting your stop losses there for a reason. I would say that's fine. That's a W risk management.
Yeah, I would say so too. I would almost say that the drive down to 80 would have been a bit more of a lucky play, but
Yeah.
I just didn't want to. I didn't really want to like take my luck any longer than all day as yesterday. You know?
Yeah. But like, especially that's why you don't. That's why you don't trade below the first range, right? You wait for a range 2 breakout, which was this,
Yeah.
because you're against
I
trend.
think
And you see, when you put it like that too, Elvis. Sorry to interrupt, Hunter. That just makes like I confuse myself when I don't see what we do now, and then like just look at the old playbook. Like Don says, like you kind of need both for each other.
They go hand in hand.
Yeah.
What was that, Connor?
I was just gonna say, once you started explaining like it starting to break after it broke and started tapping where your level's at now, like 83 almost. Once it started going further than that, then that makes more sense why it might go down to at least 80. But I was just more worried that the candle before it went to 80, I was just worried that it wasn't gonna actually do that. But if I would have waited a bit longer and saw that, I would have actually maybe been more confident to hold the 80.
I would have said another way you could have done it is potentially put your stop loss here instead. Right? Because if this flips, sure, right, you're gone. But if this doesn't flip and you're coming down, you're giving yourself a little bit more breathing room. Because you're understanding that all candles have wicks, right? You don't know how high this wick is going to be. Like, I'd also like even maybe put it like right here instead. Because I know like buys, there's like a bit of like spread and whatever, slightly above or whatever, right? But I know I appreciate this is still like 50 pips, right? But in terms of what makes sense logically, like you understand this has a top wick. This top wick could be anywhere from here, like where it is now, all the way up to here to break these highs. But I don't expect it to break these highs, because once you break these highs, it's probably going to continue going up, right?
That makes sense.
Yeah, but I understand what you did, and I did a lot of that in the past. So yeah, it's definitely like something you can start playing around with.
Yeah, appreciate that.
Yeah, no worries.
Can I ask? Yeah, you can.
Yeah, are you more sort of cautious of the fake out? The fact that the move in the range didn't hit 92?
Currently, or what? Like as it's coming down here, was I worried about the fake out here?
No, the original fake out, the range one.
Oh, this one, 96, 86.
Yeah.
I was worried for the fake out, yeah, because like that's why I didn't get into any trades.
Yeah, but would you be more cautious the fact that you hadn't tapped into 92 yet? Because there's still like a spare range to fill.
Yeah, no, for sure. Like I'm understanding that you usually get a range fill, but if you look at the smaller time frame, right, this 15, your top of the range in terms of closures is here in 90.
Okay.
So you've tapped, right? Like again on the 5 minute, this is another range. Right, you see all this? There's another range above. Right, you see this? You got a celery to come down, right? That's why you have to look at small. That's why smaller time frames are also very strong, because they give you indications of like what is your next smaller range and advantage points. Because even that, like you say 90, 92 and 90, that's 20 pips, man. Like, so there's a high chance, like if it doesn't tap there, this is probably your range, right? I'm just now looking for above 92 because that's just your next cleanest traffic. Like the traffic above 90 is not as clean for me. So, but yeah. Anybody else got any questions? If not, I'm probably going to look to end it around here. But it's been a good session. I feel like we've gone a lot in.
Can I ask last question?
Yeah, of course.
I feel like if I would go for a pineapple,
Yeah.
I'm already in drawdown. I don't know how do you have this confidence,
Oh, okay. I guess.
Well, before you start, Elvis, let me just say this. Well, Izzy, so if you don't mind, Elvis, I
Yeah,
would
go
just
for
say for that, like the most simple thing that comes to mind for me was just what's your risk? Because if you know your risk and you know that if you have, Elvis told me this before, it's like if you're for your first position on your first entry, right, your original entry, you're risking 1%, and your max, let's say your max drawdown is 5%, you can have up to 5 pineapples, right? So say like you're just like basing your charts or like where you're gonna enter logically, like I doubt you'll need more than 5 pineapples to, if that makes sense. So you'll be confident taking those pineapples because you'll know that like, okay, if I lose this, I knew like that was my risk, and I don't know, that's kind of how I see it. But go ahead.
Yeah. So what I would say is, basically, yeah, I think Jacob is definitely right. Like have enough. Like risk manager is one thing. Another thing I would say is, don't put emotion into your trade. Like for example, you're in a sell here, right? What was it, 76 or whatever, right? Say you're in a sell here. Your stop loss is all the way up here, right? That was Don's trade, right? You're understanding that in terms of price, you're generally in the short term bearish at this point, right? So at any given point, you could break the lows to come down. If price then so when price was closing back into these ranges, right? You probably had emotions there because you were thinking, oh, like, is it closing against me? Is it going to hit stop loss? It could hit stop loss, but you're understanding that before it taps into 1992 and breaks above 1992, I think it's actually above 1994 because of this, right? Until you break 1994, there is still a chance for price to come down all the way back to your TP. So the pineapples just give you an advantage point for you to potentially have the option of breaking even, right? But at the same time, the pineapple could mean that you're taking a pineapple just because you're understanding at this point there's a sell to come down, which is very in line with what you're looking for, right? That's option one. Option two is that this is a decision level for price, and every time price taps this area, you're understanding that, okay, there's a high chance it will do some level of rejection, so you're going to take profit where you can, and then that'll minimize your loss, right? Because like once it closed above here, sure, like it could start breaking above, and if this didn't flip, right? If this 4 hour then flipped up, you'd probably hit stop loss, right? But because it didn't, right, it started coming down, then your pineapples would have made sense. But even regardless, like it's just about like when you're in your first position, right? You're understanding that, okay, I'm in this position because I'm understanding it's coming down. So where is the next price point that it needs to tap before that logic doesn't make sense anymore? And that's where your stop loss should be, right? So regardless of anything within from your entry to your stop loss, you're just looking for more entries to go in. And as long as your risk management is fine, like as Jacob was saying, if you have like, you know, an ability for like 3 or 4 pineapples, then you're looking to make use of your pineapples, because then if you don't, you're just not risking enough for you to make good amounts of profits, I would say. Like you want to use them to your advantage and make profits. Does that kind of make sense, Izzy?
Yeah, but how do I do that? You know what I mean?
It takes time. It takes time. Like I would say right now you're probably struggling a little bit more with like confidence in your trade. Like you're not understanding like, okay, so I'm in this trade with Don. Why is he in the trade? Number one. Like number two, what is he looking for? And like when he's in these kind of areas for drawdown, what is he thinking about? He's not thinking about, oh shit, like I'm gonna lose 80K. He's just looking at the charts like I am. Like, okay, we closed here. So is there a chance that we're gonna hit stop loss? Yes. Is there a chance that this was a fake out? Yes, to come back down? Cool. I'm still bearish, right? So that's why he continues to be in the trade. If you don't think you like the trade, right, you can close it off at any point. But it's all logic. Like once you are confident that you understand price, you'll be fine with holding trades because you understand that at any given point your play could still work out.
Can you not finish? I get what you mean.
Yeah.
I understand it, but what's the risk by pineapple? It's like half of a position.
It's one position. So it depends where you take the pineapple, right? So
Okay.
like for example, if I open another trade here, let's say I got in like after this closed back in, right? And then I was in profits for a little bit, but I didn't take profits. Let's say you put your TP here, right? And then you had your stop loss here. Then your stop loss would probably be half the amount, right?
Yeah.
Then this would be your pineapple would be your total risk now. Say this first position was 1%, then now your total risk is 1.5%, right? But I would use the same stop loss because that's where price needs to tap if it wants to break above and start going in like the other direction. So it's the same stop loss. Yeah, see you, Jack. But yeah. Cool, nice. All right, guys, I'm probably gonna call it. It's a bit of a longer stream than usual, but some good content. Yeah, no worries, guys.
Yeah,
Thanks, Aldous.
very
Thanks,
informative
Aldous.
today. Thank you.
Yeah, no worries, no worries.
Great plan.
There will be no streams tomorrow, obviously, sadly. But I'll be back on Sunday, and then the member only stream will happen on Monday. So just everybody on the Zoom currently, yeah, and like Ian, if you want to start, you know, asking questions, you can start doing so on the Monday, or Sunday, whatever you feel comfortable with. But cool. Thank you very much for joining, guys, and hope you guys have a good weekend.
Have a good weekend. See you soon.
See ya.
You too. Have a good one.
And then for everybody on the live, the YouTube live, yeah, no worries, mate. Meligi, yeah, no worries. But yeah, like, obviously, you know, I like people having like being able to talk to the people on the Zooms, right? So if you want to have the opportunity to kind of talk to me directly, ask me questions, right? Just send me a message on my Instagram, which is EvolutionDVS. Or you can probably just DM me somewhere on Discord, or just find me somewhere. Like I'm not hiding, right? So yeah, I think we currently have like 15 members already. So we only started a month ago, so it's filling up really quickly. So if you're looking to jump in and you think it's valuable, then yeah, for sure, let me know. But if not, I will see you guys on Sunday. Thank you very much for joining up, and have a good weekend. Peace.